Solana has confirmed a weekly MACD bullish crossover, but the setup now has to beat a dense resistance zone near $90. The tension is that past versions of this signal preceded major rallies, while current price still has to prove demand against overhead supply. Rare technical setup now points to Solana Sol as the center of the story, not a broad market mood. The first thing to separate is the event from the interpretation. The event is weekly MACD turned bullish, and the pressure point is that past signals led to large rallies. That gives the segment a concrete test instead of a broad mood red. A viewer can immediately judge what changed, which actor matters, and what signal would confirm follow-through. The weekly RSI is rising around 35 after hitting 25, and analysts flagged prior cycle moves of 617%, 860%, and 100% after similar signals. This is the baseline viewers need before treating the move as bullish, bearish, or settled. The number to keep visible is $90 resistance. It anchors the scale and prevents the scene from drifting into vague sentiment. RSI rose from a capitulation zone is the confirmed frame, while resistance holds about 9.9 M Sol sets the practical boundary. If later claims appear, they should be compared back to this frame rather than accepted because the story sounds urgent. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The mechanism is technical confluence. MACD suggests trend momentum is shifting, while RSI recovery can show sellers losing control after capitulation. In plain English, the mechanism explains why the headline matters. For Solana Sol, it is not a side detail. It is the reason the event can affect users, markets, or institutions. The chart sits in a triangle is the working part, and momentum needs price confirmation explains why the outcome is not automatic. A headline can move attention, but this mechanism decides whether the event has repeatable consequences or only a short reaction. The affected side includes Sol traders, futures participants, ETF watchers, and holders deciding whether this is reversal or another failed bounce. This is where the practical consequence sits. The story is narrower than the whole crypto market. It focuses on MACD signal, Solana Sol, and the counterparties tied to the same path. Sol traders face overhead supply is the exposed side, while holders face a pivotal retest. That prevents overreach. The segment does not claim every token, chain, user, or institution is equally exposed. What remains unclear is whether Solana can break the $90 to $96 resistance area, where roughly 9.9 million Sol are concentrated. That distinction matters because traders and users can overread a first move. A useful viewer should not fill that gap with a prediction. The $90 to $96 zone is unresolved, is where evidence stops, and history does not guarantee repeat defines the proof that would make the next claim safer. That keeps the uncertainty useful. It tells viewers exactly which assumption should not be treated as fact. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The next signal is a confirmed breakout above that resistance, or a rejection that keeps Solana trapped inside the triangle. For rare technical setup, the closing read should stay tied to the next observable signal, not a prediction. If that signal appears, the story gains confirmation. If it fails, the market has to treat the earlier move as incomplete. The practical close is rejection keeps the range alive. That keeps the ending tied to a measurable signal instead of implying a guaranteed outcome. It is the readout the viewer can carry forward after the card ends and the next market or policy reaction begins.